Hey, everybody, welcome back to the podcast. All right, so this is the video everybody has been waiting for. I actually did a poll on my YouTube channel and I asked everybody what they wanted me to talk about, and everybody was talking about taxes and bookkeeping. Everybody want to know a little bit more information about the taxes and how they can do their bookkeeping for this year. Okay, we don't want to get in trouble with the IRS, Miss Michelle. So we want you to help us out here. I have Miss Michelle Bryant on. This is the second time she's been on the show. Okay, so for everybody who hasn't seen the first show with Miss Michelle on there, just tell them just a brief background about who you are and what it is you specialize in.
Hello, everyone. My name is Michelle Bryant, owner of Bryant's Tax Logistics and Accounting Services, LLC. Okay. I have been in the tax industry, in the tax business, or have been doing taxes since 1996. Okay, yeah, that was a long time ago. I was 15, started doing it by hand. Then over the years, I started working with H&R Block, taking all these classes and just gaining all the knowledge I can so that I can prepare taxes accurately and difficult level types of taxes. I'm also specializing in logistics industry. I've been in logistics since I was 18. All right, so that's over 20 years ago. And what I decided to do, because I was getting a lot of truckers that was asking me about taxes, I was able to mirror the two. And now I'm a tax professional that specializes in trucking taxes. But I have other clients, other businesses that I deal with, but that's just my specialty. I'm also a civil engineer on top of everything else. So I got a busy plate. Let's just say that. I have systems in place to keep it going. So that's that.
Hey, okay, that's what I'm talking about. Ain't nothing like them systems, girl. Okay, this is my traveling buddy right here. You guys. Okay. For those that don't know, Miss Michelle Bryant, she does do my bookkeeping and my taxes for anybody that wants to use Miss Michelle Bryant. All right.
Yeah.
But I wrote down a few of the most commonly asked questions about bookkeeping and taxes. You know,
Okay.
send us questions, and I always tell people whenever I do my consultation calls that I am not a tax preparer specialist. I can't answer all of that stuff that y'all talking about, but I will be doing on it, and this is the video.
Okay. So, sounds like a plan.
One of the first questions that people ask is about the mileage. What's the best? It said, what's the best way to track your mileage every year? You know, they just keep the receipts of the gas. Like, how do you track mileage when it comes to tax?
Well, there is an app that has a mileage tracking system that people use. I can't remember the name of the app on top of my head, but in addition to the app, you can just get like a little journal book and write it down. Write down your miles to and from wherever. Keep your gas receipts, because if you should get audited, the auditor is going to ask for written proof so you can pull the information from the app. Now, you want to make sure that you're able to export the information from your app if you choose, if you should get audited. So you want to test it out, because you have a lot of different programs out here that you don't know, it can't do certain things until you actually need it. So you want to test it out. But the safest way is to write it down, have a daily log. And one of the questions when your taxes are prepared is the information written down? Okay. You want to keep all your gas receipts, okay, for that particular vehicle. So that you can back up your deductions as well. And that depends if you do actual and standard deductions. So that makes a difference as well.
Awesome. Okay, I hope you guys heard that. I happen to use QuickBooks, you guys. So it's really easy with QuickBooks. You can
QuickBooks is one of them.
You can get the receipt and just take a picture of it and then upload it to the QuickBooks account, and QuickBooks will keep up with the receipts for you. Okay, so that's a great way to keep up with all of your mileage as well. The next question that I have here is it says, should I make estimated tax payments?
Yes.
Do people make estimated tax payment?
Yes, business owners should be making estimated tax payments, because what happens is if you don't pay that money, estimated tax payment, first let me break it down and let you know what it is. Estimated tax payment is when you make quarterly payments on your tax liability. Tax liability is an amount of taxes that you owe whenever you do your taxes, whenever everything is reconciled. Now, say for example, if you made 50,000, okay, in net profit. So you're gonna owe taxes on that 50,000. Let's say your taxes that you owe is, 6,000, okay? Well, you can divide that 6,000 into 4 and make that payment every quarter, so that whenever it comes time to prepare your taxes, you won't have to pay that amount out, all right, at one given time. And if you don't pay by the April 15th deadline, then you'll be paying additional interest and penalties to the IRS, so you'll be wasting money. So what if you don't know if you're gonna owe or not? Well, the good rule of thumb is I always tell my clients to send something. Something is better than nothing. The less amount that you have to pay by April 15th, the better. Now, if you overpaid in estimated tax payment, you would get that money back in the refund. So it's not like money's going to be lost anywhere. Okay. Yeah. Now, if you don't have a tax liability, like if you have kids, or if you didn't make as much, you don't have as much net profit or whatnot, then you don't have to worry about making that estimated tax payment. It just depends on your tax liability.
Awesome. Okay. So let's talk about deductions. Okay. So
Yes.
what would be some of the best, what are some deductions that we can take out as business owners? Just give us some examples.
And with the cleaning business in general, the different equipment and stuff that you have to purchase, all right, it has to be depreciated over a given time. Now, as of 2022, you were able to take up to 100%. And I'm looking at my sheet here, so I won't forget nothing. Okay, so if you see me looking at looking to the left, I have another screen right here. All right, so I have, I just took a 6-hour tax update in a 3-hour test. And my brain is like, but in that update, it says that for items that were purchased and placed in service all the way through 2022, you were able to take advantage of the bonus depreciation from 17 to 2022, certain dates up in there. And you were able to take the advantage of the bonus depreciation, meaning if you purchase something to help with your cleaning, it costs you $10,000. You're able to take that $10,000 a one-time deduction, bonus depreciation, but that expires after 2022. So if you purchase something this year, place it in service in 2023, you're only going to be able to do 80%. In 2024, you do 60%, so it declines from there. But in addition to the bonus depreciation, you also have your regular depreciation, your special depreciation, which is something that's always forgotten about. So you want to keep track of the equipment that you're purchasing so that you can take advantage of these deductions, depreciation deduction. And another thing is the supplies. You spend a lot of money on supplies, cleaning supplies. So you want to make sure that you keep up with whatever you're spending so you can get that as a deduction. If you purchase it from a warehouse, the warehouse may have the ability to print you out a yearly statement. It wouldn't hurt to ask if you don't already have one, so that you can have proof of what you actually spent and you can keep that record. So if you should get audited, then that'll be available. And the reason why I keep saying get audited, because the IRS hires so many people this year, and I know they ticked off all these scams going on with PPP and EIDL scams and stuff like that. They're going to be hitting people hard with audits. So you want to make sure, especially business owners, so you want to make sure that you have your ducks in a row. Okay.
Exactly. All right. Yeah. So what about food? Deducting food, from your expenses. Like what's the limit on that? Is everything deductible? Like
food is tricky, because the one thing about, you don't want to get caught up with the food because it's really tricky. The one thing about food is if you're just purchasing food to feed yourself while you're on the job, then that's just buying lunch for yourself. But
Mhm.
if you're buying dinner or something for a customer, if you're trying to get a contract and you're taking that customer out to dinner or lunch or breakfast, then that's when you can talk about deducting. Okay, unless you are away from home. So if you're in Savannah, you have a client that's in South Carolina, Hilton Head, wherever the resorts are,
Right.
Airbnbs, or if you have those type of contracts and then you're purchasing dinner or breakfast or lunch out there, then you're away from your home.
Okay.
Okay, so it'd be a lot easier for you to claim that as a deduction and explain that deduction.
Right,
Okay,
right. I
when
would
you're
always
away
say
from
if
home.
you're gonna do an employee dinner or anything like that, make sure
Mm-hmm.
you video it, make sure you take some pictures,
Mm-hmm.
any type of thing that you can attach with that receipt, just in case. So you can
Right.
say, on this date, you have all long as I feel like is the more receipts you have behind whatever it is
Mm-hmm.
you're doing, the better. So when
Mm-hmm.
it comes for you, you can say, here go the pictures, here go the footage, here go the receipt.
Yeah.
I was here, this was it.
You
Okay.
can do like a safety bonus meal or something like that.
Yeah.
Or a meal for employee appreciation, and have your employees all sign in, keep a log, hey, this employee appreciation, everyone sign in, so that can be your proof, of what you're paying for your meals and stuff like that. But the IRS has gotten a lot stricter when it comes to meals within the last few years, because of people, taking advantage of it and stuff like that. So when I go, like I was just in Indiana, Missouri, a few months ago with my full time, I had to use my corporate card for my meals, but then I used my personal card for my drinks. And when
Right.
I went to Vegas, I did the same thing. I used my business card for my meals and stuff like that, but I use a different card for my drinks. So just in case if I should get audited, I'll be able to say, hey, I was in Vegas and I paid whatever for my meals because I was there attending a tax conference. And it
Right.
was 8 a.m. to 5 p.m. tax class, one after another, after another, after another. So I'm gonna eat good.
I'm
That's one thing I'm gonna
gonna
do.
use this card.
I'm gonna eat my food, but I paid for my drinks separately, so it wouldn't be, because you can't. The IRS not gonna reimburse you for drinks.
Yeah. Oh, yes. You're right about
Yeah,
that.
yeah.
Okay. Good. 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 Okay. So another most commonly asked question is about
Hmm.
the home office. Okay. Like, how do you go about writing off your home office? What actually qualifies for a write-off when you talk about your home office? Is it the whole house? Is it the living room? What if your office is connected to the dining room? Like, we we get these questions all the time. Like, how much square footage am I writing off when it comes to my home? Or how do I even go about doing it?
Well, with your home office, it has to be a dedicated space for your business. So it has to be like a dedicated room. You can't have your dining room here and the office here, unless you're using the whole space for your office. So that's the first thing. You want to have a dedicated space, okay? And there's different rules that apply to the time it takes. And I had a lot of questions on it. The time it takes, the time that you spend in that space on your business, or if you're conducting business, having people come to your home, this area, to conduct business. So there's certain rules that apply, like test questions apply to determine whether it's a home office, consider a true home office or not. Now, there are two different deductions, right? You can do a regular deduction where it's $5 per square foot, up to 300. Okay, so that's the max. So that's a automatic $1,500 deduction. But if you don't go that route, then you do the deduction where you can enter your utilities, the repairs and stuff you made, and it would allocate it based on the square footage. So it would ask you for the total square footage of your home and the square footage of the space that you're operating your business in. And
Okay.
that calculation will use to deduct like a certain percentage from your utilities to use towards your business, from your including like internet, depends if you have a mortgage or not, depends if you're renting or not. You know, there are different expenses that you can write off pertaining to that office space. But the most important thing is to say that you have that dedicated space for your business.
Okay. So is the IRS actually knocking on people's door to see, like, let me measure this space and see if whether you lied or not?
No, they're not doing. I don't think they're gonna do that. But you know what? You never know. And I'm over here looking because I have a term I would like to use, and it's not in my brain right now. But okay, so it's like an exclusive use test.
Okay.
And they just might knock on your door because you never know. You know, the auditors, shoot, they might ask for like a plan or a drawing of your home or something. You never know what they're gonna ask for. But there's an exclusive use test, okay, that is used to determine whether that space qualifies as a home office space. Okay, and some of the factors is the amount of time spent at each place where you're conducting business, the relative importance of the activities performed at each place where conducting, business. So there's a lot of different factors that go into that. The form is 8829, and in addition to the deductions, the utilities and insurance, you can also deduct your security system that can be deducted, renter's insurance if you're renting. So and the method I'm speaking of with the $5 times 300 square foot is the simplified method.
Okay, that's dope. All right, we got some good questions coming in. All right. So the next one is, do you think having a bookkeeper or CPA is necessary when you first start a company? Is it necessary to just get a bookkeeper and a CPA right away, even when you don't have nothing but like one client?
Yes, it's good to have so you can always know your numbers. Also, if the IRS asks for it or if anybody asks for it, you have your profit and loss, your balance sheet. I don't know how many clients I had within this year. Actually, when I came back from the Dominican Republic, I had to work on a big bookkeeping client that needed their stuff done to buy a home, and what happened was they were trying to buy a home, obtain a mortgage for it was well over $500,000. I think it was like $700,000. And but he's a truck driver. Not truck driver, he owns freight trucks. He owns several. So he makes the money.
Okay.
Right. And but I spoke to him about doing bookkeeping. He like, okay, right before I left for my trip, his wife called like, oh, I need bookkeeping. Okay, you need to let me know before I leave for my trip. Then he let me know. When I got back, she was like, oh, I need a balance sheet. So what happened was she created a book profit and loss. When you create a profit and loss, it's considered financial fraud. So if you're trying to obtain a mortgage or obtain a line of credit, established business credit, and if you come up with a profit and loss based off of what you think and it's not in a program, that's considered financial fraud. Okay, so I had to tell her, look, I have to do this. So I had to do it and create that profit and loss, and in turn, it also create a balance sheet. But you always want to know what your numbers are, no matter how many employees you have, because it helps you.
Awesome.
Okay, so it's not based on the number of employees you have, it's based on you owning that business.
Okay. All right. Good. Okay, so next question would be, how can a person go about reducing the tax bill?
Only thing you can do is reduce it is buying a lot of stuff deductions. But you don't want to, the main thing is all we focus on as business owners, because I'm still a business owner and I work. So it's like, my tax bill, But anyway, that's a whole nother story. And I do tax and I'm like, but the thing is, the amount of deductions you have, you can hire your child, and that child can work long as they're working a position in your company, you can have that as a deduction. There's a lot of different things you can do to bring down that tax bill by creating and having more deductions. But the problem you're going to have is when you're trying to obtain a loan or a car, especially when your business is your only source of income, you're going to have a hard time being approved, because what they're going to ask for, even with a credit card, when I'm trying to get a credit card, hey, I work, but still I have my business, but they want to see my tax returns that show my business on there to get a credit card.
Yep.
You know what I mean? So it's like, all that comes into play when you pay less taxes.
Yeah.
But the best way to do it is to keep up with all your receipts, get your bookkeeping done so that you can accurately account for the amount of deductions you have to bring down that income. Once you bring down that income, then you have less tax to pay. Now I will add something, there's a lot of stuff on YouTube where people are preaching S Corp, S Corp, S Corp. S Corp, yes, S Corp will reduce the amount of taxes you owe. And what the S Corp does, it reduces your Social Security and Medicare tax. That's on your Schedule 1. Okay, but you still will have to pay ordinary income tax on your W-2 that is created by your S Corp. But the problem come in is you're not paying Social Security and Medicare tax. So if you should ever need Social Security and Medicare, a lot of us say, I'm not going to use it. It may not be there when I get old, or I might not use, but you don't know what the future holds. I had a stroke 5 years ago. I could have just been on, Social Security for disability. But if I'm not paying into it because I'm an S Corp, then what money I'm going to have to pay back to me when I need it, or when my kids need it, even though I don't have any kids, but I'm just saying, when my kids need, if something happen to me or whatever, your kids get disability. But if you're not paying into it, then what they're going to have. So you got to think about that when it comes to S corporations as well.
Right. Can you explain to us exactly what the S Corp is for my newbies out there that don't really understand S Corp, C Corp, all that stuff? Like, they might be confused right now. Like, what?
I know that's a lot of information.
Okay, that just went over my head real quick. Like what is an S Corp?
Okay, S Corp is, you got C Corps and S Corps. All right, corporations is when you have, like S Corp, for example, you have 100 shares. All right, if you're an LLC, you have one person, one owner, unless you have a multi-person, have a two-person, two people, whatever, partnership. Okay, LLC. But a corporation, you have 100 shares. Some people get it to they're gonna have investors. And when people invest into their corporation, that person, the original owner or whoever, the CEO, may have 50 shares. And they may sell off 20 shares. They may sell off 10 shares, that person. Or they may have 20 shares and sell off the rest of the shares. So everyone whoever has a share have a part in a say in the company. Okay. The person who has the most power is the person who has the most shares.
Right.
Like you say, Amazon, you see Amazon, all these companies, they talk about, oh, this person has so many shares in that business. That person has, so many shares, they have a big say in what goes on because they have the most, enough shares and stuff. So same with S Corporation, that's what it is. So when you're an S Corp, the difference with S and C is C corporation, you pay taxes 2 times. So you pay tax on your corporation and you pay tax on your personal. S corporation, the taxes or whatever you owe or whatever you done flows to your personal tax, file, and you pay it there. So it flows through, it passes through to your individual tax return.
You're paying yourself as an employee when you're
S
corp?
Yeah, when you S and C corp, you pay yourself as an employee if you're participating in the business.
Right.
Yeah,
so
so
for
you
the
pay
people,
yourself.
for my cleaning business owners that have LLC, should they be paying themselves as a employee?
Only if you incorporated that LLC. So you have a LLC and you can file the form to be an S corp or whatever corporation, whatever you're going to do. But as an LLC by itself, you pay yourself. No. Only thing I suggest is when you're an LLC, you just I have guys who transfer their money every week to themselves out of their business to their personal, or they, do it that way so that you receive your income and put on there as income or whatnot. Because corporations, if you're participating in your business, you got to pay yourself a salary, cut yourself a W-2, but then that salary and stuff gets deducted as a deduction from that tax return. And you're going to have 2 separate tax forms when you're S corporation. So S corporation a little bit more expensive because it's a little bit more difficult.
Yeah.
But a lot of people preach the best way to avoid taxes is by doing S corporation. I just want to point out that that's not always true. You only avoid the Social Security Medicare tax. You're still going to pay your ordinary income tax, but then you got to think about Social Security in the long run if you should need it or if your children should need it.
Right. Exactly. So what are some of the most common mistakes that you see small business owners make when it comes to doing tax?
Depreciation. There's a lot of common, most missed things out there. Depreciation, when to depreciate, whether you use standard deduction or actual expenses. Another one is the supplies, payroll. If you have independent contractors, it's good to keep up with the pay as far as cutting them checks, doing direct deposit or something, and not just do Cash App and Zelle payments. So that's a lot because you can't really track how much you pay in order for you to get that deduction.
Right, exactly. Okay.
So that's a lot of common ones, and home office is a big one that's missed a lot. And that's pretty much a lot. Anything pertaining to a vehicle.
Okay. What would be some things that small business owners need to do since it's tax season now, to get prepared for their tax season? Like what advice could you give them right now since we're here in Texas?
If you hadn't done your bookkeeping or anything for last year and you owned the business all last year, you want to get that cleaned up. And you can do it yourself. You can go and sign up for QuickBooks. I will have links on my website if you want to go to my website and sign up. Also, in my website, www.bryantstaxlogistics.com.
I'm gonna put it down below.
And you see how I did that? www.
I got you, girl.
But you want to organize your receipts. You want to go through and think about it, write down. If you pay contractors or someone to help you, write down the name, how much you pay. You want to make sure you keep a track of whatever you purchase, like big equipment you purchase, or if you even leasing it, making, lease payments on it, write that information down. Business credit cards, or if you pay for something out your personal when it should have been for your business, then you want to backtrack that amount out so that you can have it as a deduction what you pay with your business, with your personal debit card or credit card for your business and stuff like that. So you want to start organizing your paperwork and stuff for your deductions so that it can be a lot easier for your tax preparer when it comes down to preparing your taxes.
Okay.
So that's the thing that takes the longest time is organizing the paperwork. And this year I had to implement charging per hour, $200 per hour if I have to go through a box of receipts. Because I get a big box. I swear, I'm like, oh, that thing give me hot palpitations. I'm like, oh my God, what in the world?
Wow, a box of receipts?
I have boxes and all from truck drive, all from people who have transportation companies. And these guys make 2, 3, 4, 500,000, 600,000 a year.
Wow.
So imagine the amount of receipts go along with that.
And you got to go through that? Are you scanning that? Oh yeah, you gonna pay $200.
Yeah. Yeah, I go through it. I have an assistant go through it. And you know, help me put it together, but it's a lot. It's a lot. So
that's good. That's good.
Yeah.
Man, oh my gosh. Okay, so last but not least, I have a question. They always ask about spouses. Like a lot of the cleaning business owners, they may work with their spouse, you know. How would they go about paying their spouse? Whenever they're a team, you know, they might be married or something like that. Like how would they go about doing this, you know, the right way? We all know how to do it under the table, but
well, I'm laughing because I get this question a lot, and they be about to take each other head off. So I would answer this in a way so that, you know, nobody gets in a fight, a tussle with their spouse about this. Okay. But you want to put your spouse on payroll. Keep down the confusion. Because you may have a spouse that like to spend more, you know, than the other, and then that creates arguments.
Okay, yes, it does. Yes, it does.
So, because they see the money there.
Right. Okay.
You know, so yeah, so you want to put your spouse on payroll. Yeah.
Okay.
You put your spouse on payroll.
You think that they should be like an employee, just put them on payroll as an employee.
Keep down the confusion, keep everything
down the
separate, good. Y'all come to a understanding of the amount the spouse can get paid. But from my experience dealing with a lot of people who are in that situation, the best thing to do is put the spouse on payroll.
Okay. All right. You guys heard it.
Otherwise, that spouse will use it as a piggy bank. And I'm not saying the spouse will, but it can be done.
It's our money. Okay. Okay.
Yeah.
So, and the business still needs the money to survive and breathe. You know what I mean?
That's right.
All right. So thank you so much, Miss Michelle. I think I went over the time just a little bit, but I wanted
to know you are right.
All the questions that came in. I hope we was able to provide some sort of value to you guys today. Miss Michelle, let them know one more time what the name of your company is. We will put the links down below.
Okay.
If you guys need a bookkeeper, because she does specialize in bookkeeping as well as she's a tax professional. Okay. So all of her information will be down below, but just let them know what your name is and what the name of your company is.
Okay. My name is Michelle Bryant. My company name is Bryant's Tax, Logistics, and Accounting Services, LLC. I just created a Patreon, and I had to write down because the Patreon, Bryant's Tax Logistics, and you can join that as well if you're a business owner for taxes, and that's yearly tax support. I'm on Instagram, Bryant's_tax. I'm on Facebook, Bryant's Tax. I'm everywhere, Bryant's Tax. My email is info@Bryant'sTaxLogistics.com. So if you need me, you can call me. I don't know. I didn't write down my phone number off the top of my. I got I can't remember my number. But anyway, I'll send to you.
Yeah, send it to me. I'll put it in the description, you guys.
Okay.
Right? Get your bookkeeping together, get the taxes together, okay? We do not want you guys to get in trouble with the I, R, and the S. All right. We are out of here. We'll see you on the next episode.
Bye-bye.